Picture this, a penthouse overlooking the Burj Khalifa. You've got an 8% rental yield hitting your bank account every month, completely tax-free, and to top it off, a 10-year golden visa, all from buying just one property. Sounds very good, right? I mean, that's a sales pitch for Dubai real estate, and on paper, it looks unbeatable. But what if that shiny new penthouse could lose value faster than a supercar? What if those numbers that seem too good to be true actually are? Because yeah, everyone loves talking about the gold mine. But today, we are going to look past the slick sales pitch and search for the landmines. We'll compare the Dubai real estate market with the titans of the global market. We are talking about the stable, historic powerhouses like London and Paris. Is Dubai's fast and furious market actually a better investment, or is it just a high-stake gamble compared to the slow, steady wealth of the whole world? Stick with me, because by the end of this video, you will know exactly which market is right for you. Okay, so before we dive into the numbers, let's try to understand what is the fundamental difference between these markets. I want you to think about Dubai like a sprinter. It's young, explosive, and built for pure speed. Its real estate market basically shot up out of the desert sands back in the 2000s, fueled by massive ambition and a flood of people moving in. This market is incredibly exciting and it can lead to some insane growth. But it also means that it can get slammed by sharp and painful corrections. And London and Paris? It's a totally different story. They are the marathon runners. They are the ancient cities where the property market has been growing for centuries. Their growth is not just a sprint, it's decades of steady and reliable gains. They are seen as safe haven for your money because of their rock-solid laws, diverse economies, and deep cultural roots. They will not give you the jaw-dropping Dubai returns overnight, but they provide something even more valuable for certain people, which is the stability. So you see, it's not just a numbers game, it's just a different philosophy. Are you chasing the thrilling high-risk sprint, or are you in it for the long and stable marathon? Let's find out. Alright, so let's get into the round one. The round one is all about cash flow. And let's be real, this is Dubai's kingdom. The number that gets everyone's attention is a rental yield. In Dubai, you're looking at gross rental yield between 6 to 8% on average. Some spots even get a wide 9 to 10%. Now let's look at a marathon runner. In London, the yields are way more modest, hovering between 3 to 5% on average. And Paris is right there with an average of 4%. So on rental income alone, Dubai is already kicking out almost double the cash flow. But here's the knockout punch: taxes. In Dubai, that rental money is all yours. Zero income tax, zero capital gain tax when you sell, zero annual property taxes. This tax-free setup is a massive deal and makes your net return just go through the roof. In London and Paris, it's a completely different story. You are going to be paying income tax when you earn, capital gain tax when you sell, and of course, annual property taxes in some cases. All of that stuff takes a serious bite out of your actual take-home profit. So for pure, unfiltered cash flow battle, it's not even a contest. This round goes to Dubai hands down. Okay, round two, what about growth? This is where the story gets a little bit more complicated. Dubai's property market has been on a wild ride, but you have to remember that this kind of explosive growth comes with a pretty volatile history. Dubai has seen some major boom and bust cycles before, think 2008, and what shoots up that fast can come crashing down just as quickly. In fact, some analysts are already predicting a price correction of up to 15% starting in late 2025, mainly because of a flood of new homes that is about to hit the market. Now let's flip over to London and Paris. Their growth is way more measured. London is forecasting pretty modest price growth, somewhere around 2 to 3% for 2025, and after a recent dip, Paris is seeing a fragile recovery, with prices also expected to go up about 2 to 3%. So yes, those numbers, they don't get your heart racing like Dubai's do. But here's the key. If you zoom out and look at the big picture, these markets have delivered consistent, steady growth for decades. They have protected people's wealth through all kinds of economic storms. They are built for long-term stability, not for short-term speculation. So who wins this round? Honestly, it really depends on your timeline. If you're looking for short-term high-risk, high-reward growth, you've got to give the edge to Dubai. But if you are looking for a long-term, stable way of preservation, it's tough to argue with the track record of London and Paris. Round 3. So as an investor, we always hear that every investment has risk, right? But the kind of risk that you're taking here is totally different. Dubai's biggest risk for me, do you know what it is? It's actually its own success, the oversupply. The city is always building, and that incredible ambition can lead to a glut of properties on the market. Between 2023 and 2026, we are talking about an estimated of 250,000 new units expected to be delivered. That's a ton of new housing that could push both prices and rents down. But you have to give them credit where it's due. Dubai has learned from its past mistakes. The government's Real Estate Regulatory Agency, or RERA, has put some really strict rules in place to protect buyers, like the escrow account that holds your money safely when you buy off-plan. On the flip side, the biggest risk in London and Paris is not some sudden crash, it's just the high walls that you have to climb just to get in. In London, the property laws are notoriously complex and the UK hammers you with higher taxes and duties. So while these markets are seen as legally safer, they can be a huge, expensive, bureaucratic headache. So this round is pretty much a toss-up. It really boils down to what you are most afraid of, a big market swing or a mountain of paperwork. Round 4. So now for the exact same amount of money, what do you actually get on the ground? So this is where the Dubai's value proposition is hard to ignore. For the equivalent of $1 million US, you could get approximately 1,000 square feet in a prime location in Dubai. In London, the same $1 million get you about 350 square feet. Let that sink in. That means you get almost 3 times more space for your money in Dubai. And it's not just about the space either. The barrier to entry is just slower, period. But the real game changer, that's the Dubai's Golden Visa program. An investment of 2 million dirham, which is about $545,000, can get you and your entire family a 10-year renewable visa. And you can even do this with a mortgage. London and Paris just don't have a direct equivalent where buying a house gets you residency. Sure, foreigners can buy property in the UK, but it doesn't come with any special visa perks. In Dubai, real estate is a tool that they use to bring in talent and long-term residents. It's just a different purpose. This round is a decisive win for Dubai. The prices are more accessible, you get way more for your money, and it offers a direct path to residency that these other markets just can't match. So after all of that, which one is actually better? The truth is, there is no single better market. It completely depends on what kind of investor you are. So who is Dubai for? It's probably the right move for you if you are a yield chaser. Your number one goal is getting the highest possible rental income completely tax-free. It's much easier to get a good rental yield over here. The second reason why Dubai might be for you is if you are okay with risks. You are comfortable with a bit of a roller coaster ride and you are looking for fast growth over say 5, 7, 10 years maximum. And you know there might be some bumps on the road. The third reason you might want to invest in Dubai is you want an easy entry and the lifestyle perks. You want more bang for your buck and you love the idea of that 10-year golden visa that opens up a whole new life in a global hub. On the other hand, London and Paris is likely your best bet if you are a wealth preserver. Your main priority is not hitting a home run overnight, it is about the slow, steady and reliable growth of your money over generations. And you are risk averse. You just sleep better at night knowing that your money is in a stable, highly regulated market that has a long history of bouncing back from pretty much anything. And you're thinking long term. You're not just investing for yourself, you're investing for your family's future and you prefer the rock solid legal and financial security that these old world capitals offer. Look, at the end of the day, it's not about good versus bad, it's about what fits your personal journey. Dubai is making a seriously powerful case with its high energy approach that's really shaking things up. But London and Paris are still the gold standard for anyone who puts stability above everything else. So now I've got to ask you, where would you put your money? The sun-drenched high-yield world of Dubai or the steady, historic streets of London or Paris? Drop your thoughts in the comments below. I'm genuinely curious to see what you think. And hey, if you want more deep dive just like this one to help you make smarter investment choices, do me a favor and hit that subscribe button and ring the notification bell so that you don't miss a thing. Thank you so much for watching and I'll see you in the next one.